Today is a day I've been working towards for over 4 months. After months of intense negotiations, we are minutes away from passing the Genius Act.
Breaking news, the U.S. Senate has officially passed the Genius Act, a landmark piece of crypto legislation that establishes a regulatory framework for stablecoins for the first time in history.
Senator Bill Hagerty's legislation that will be a first step towards modernizing the American payment system and integrating digital assets into the U.S. economy in a responsible way.
Stablecoins are the on-ramps into the crypto market, meaning trillions and trillions of United States dollars finally are allowed to use this crypto on-ramp.
In Wyoming, we recognized early on what the rest of the country is beginning to understand, that digital assets are a force for good, and that you can have both responsible innovation and consumer protection side by side.
In this final historic speech from Senator Bill Hagerty himself, the U.S. is one step closer to becoming the global leader in crypto. Let's listen to this piece of history, it's about 2 minutes long, and then summarize the details of the bill, exactly how this now affects you, as well as the latest altcoin news, so watch today's whole video.
Today, on a bipartisan basis, the Senate will pass its first major digital asset legislation ever, the Genius Act. With this bill, the United States is one step closer to becoming the global leader in crypto. The Genius Act establishes a pro-growth regulatory framework for payment stablecoins. This bill will cement U.S. dollar dominance, it will protect customers, it will drive demand for U.S. treasuries, and it will ensure that digital asset innovation happens in the United States of America, not abroad. With Genius, the value of stablecoins will be pegged to the U.S. dollar and backed one-to-one by cash and short-term U.S. treasuries. This will provide certainty and confidence for more wide-scale adoption of this transformational technology. By combining the dollar's advantages with the speed and the efficiency of blockchain technology, the Genius Act facilitates traditional finance's adoption of crypto and ushers in a new era of payments. The prospect of faster and cheaper payments will have far-reaching implications for our financial system. Once the Genius Act is law, businesses of all sizes and Americans across the country will be able to settle payments nearly instantaneously, rather than waiting for days or sometimes even weeks. Put simply, stablecoins are a paradigm-shifting development that can bring our payment system into the 21st century. This legislation establishes procedures for issuing stablecoins. It designates clear roles for federal and state regulators. It implements standards for consumer protection, and it includes strong safeguards to deter illicit activity. Protections so that with the passage of Genius, stablecoin issuers could become the world's largest holders of U.S. treasuries by 2030. Such an outcome would enhance our physical resilience, and it will cement the U.S. dollar's dominance as the global reserve currency. The positive implications of this legislation are hard to overstate. Today will be remembered as an inflection point for innovation in the United States of America.
So how this affects you, because the devil is, of course, always in the details, but to me, this turned out really, really good. So number one, who can issue stablecoins? Well, insured depositories or their subsidiaries, federal qualified issuers or state qualified issuers, essentially meaning already regulated financial entities in the United States. Qualification factors. Obviously, if you're issuing stablecoins, you have to meet reserve requirements, as well as, I guess, have limited to no felony offenses, and have competence, experience, and integrity of officers. Again, this is nothing new. This is how they treat the traditional financial system, just updating it now for Web3. Reserves. 1-for-1 backing in Federal Reserve balances, cash demand deposits or treasury instruments. Rehypothecation is generally banned. Rehypothecation meaning when banks or financial institutions can lend out money that they really don't have based on your assets while also giving you a loan on your assets. Eventually, this builds a house of cards. Again, banning rehypothecation for now is safer. That's better. I like that. And one-for-one backing, meaning this has to use the US dollar, or of course, treasury instruments that hold the US dollar. Scott Bessent likes this. Donald Trump likes this because this will create more international demand for the US dollar. This is good. Number 4, redemption and disclosure. There has to be clear procedures for timely redemption. Issuers must publish a monthly audited reserve report plus annual independent audits, and you can't market stablecoins as a legal tender or FDIC insured. The final 2 things I do want to highlight. Number 1, custody. Both reserves and private keys must be held by an FDIC/NCUA bank or OCC charter trust bank or other federally supervised custodian. So specific custody providers backed by recurring audits. And finally, anti-money laundering compliance. Issuers and custodians must be able to freeze tokens on lawful order. Treasury may block non-compliant foreign stablecoins. And of course, stablecoins are the direct opposite of Bitcoin. They're permissioned. Anybody that's in charge can freeze your tokens, freeze your transactions, ban you from the system immediately. And Austin, isn't that bad? Well, it's just what it is. We already knew stablecoin issuers and middleman entities. There's nothing more centralized than these stablecoins. Bitcoin is permissionless. It's censorship resistant, as opposed to stablecoins, which can be censored. So something like this was inevitable, and I'm glad we finally have it, because if we look at the history of Bitcoin, pay no attention to those arrows, but the history of Bitcoin, Bitcoin's first 15 years in existence, we thrived, we grew, while Bitcoin and crypto were a scourge on the system. They were not compliant. They were looked down upon. You weren't allowed to use it. Bitcoin and crypto grew in spite of that. It was finally back at the beginning of 2024, right here, like here, for the first time in history that Bitcoin ETFs were allowed. We then started seeing some institutional demand. And then, like right here, for the first time in history, we finally have the biggest crypto legislation bill that America has ever seen. That means that fundamentally, this is very, very good for the crypto industry. Also, the reason you subscribe to Altcoin Daily is to stay up to date on the crypto news. This can give you an edge when investing. So if you've been thinking about it, if you just found Altcoin Daily for the first time, click subscribe. Join the 1.61 million people that aim to make money in crypto, like me. And this is interesting. Coinbase, this is breaking. Coinbase is seeking SEC approval for tokenized equities, meaning while TradFi, traditional finance, Robinhood, the big banks are looking to get into crypto, Coinbase is looking to also bring tokenized equities trading on their platform, meaning Web 2 is merging with Web 3. These systems will become intertwined. Of course, sponsor of the channel Multibank, always making news. If you believe the next bull run will be fueled by real-world assets, institutional liquidity, and licensed platforms, then MBG token may be your choice. As you know, Multibank is highly regulated. It's TradFi meets crypto, which I like. Regulated exchange powered by the MBG token. We did a broader deep dive a few weeks ago. I highly encourage you to check out this video right here. It started. World's largest $3 billion crypto deal happening now, Multibank. This is your beginner's guide. This is your deep dive on Multibank. I'll link this down below. Check it out. Of course, you've seen this before. Bitcoin is now 1.3% of global money. So even though Bitcoin's big in terms of crypto, it's nothing compared to the traditional financial system. All this is opportunity, is upside for Bitcoin. And in Ethereum news, JP Morgan partners with Coinbase-backed Ethereum L2 base to launch JPMD Coin, a USD deposit token for institutional clients. So JP Morgan is launching, I guess, a stablecoin, but the bigger news and why this matters to me is because they chose Ethereum's L2 base. This is signal. This shows you Ethereum is being adopted. Click the like button if you got value in today's video. Seriously, click the like button if you want to support me. And like always, see you tomorrow.